Okay, so let's dive right into this Crocs Q3 earnings call from earlier this morning. The stock is down, almost 20% as we're recording this.
Yeah.
So clearly something in this call really spooked investors. Even though the company exceeded revenue and profitability expectations for the quarter, the market reacted pretty harshly. We're going to try and unpack what happened and why it matters, even if you don't currently own CROX.
Yeah, it's definitely fascinating, the disconnect between the company's performance and how the market reacted. On the surface, things look pretty good. The Crocs brand itself had a really strong quarter, exceeding expectations, as you said.
Right. Global revenue for the Crocs brand was up 8%, fueled by a very impressive 17% growth in international markets. And that's significant, especially considering all of the economic uncertainty that we've seen this year.
Yeah, and it's important to note that the growth, it's not just coming from one particular product. The classic clog continues to be a top performer. And what's driving this? Well, Crocs has very cleverly tapped into this whole personalization trend with Jibbitz, those little charms you can add to your clogs. They've taken a simple shoe and turned it into a platform for self-expression.
It's brilliant. Jibbitz are like little collectible items, creating that gotta catch 'em all feeling for consumers. They've partnered with some big names too, haven't they?
Absolutely. Collaborations like the Bath & Body Works collection, those scented Jibbitz, and of course the McDonald's Happy Meal partnership generated massive brand awareness. That McDonald's Happy Meal promo with those mini classic clog keychains was incredibly successful. Over 400,000 Happy Meals were sold in China alone within the first 48 hours.
Wow. That is a lot of Happy Meals. It sounds like they're really knocking it out of the park with these marketing initiatives.
Yeah, and it's estimated that the McDonald's campaign alone generated over 10 billion brand impressions in China. And then they've rolled it out in more than 40 other countries. So these collaborations not only drive sales, but also keep the Crocs brand, fresh and relevant for consumers.
So the Crocs brand seems to be thriving. But I have a feeling there's more to this story, right?
Yeah, you're exactly right. While Crocs is performing well, there's a cloud hanging over the company. And that cloud is HeyWDDE.
Yes. The casual footwear brand that Crocs acquired back in 2021. At the time, it was seen as a very strategic move to expand their market reach. What's the issue? Are people just not into those comfy slip-on shoes anymore?
Well, it's not that simple. HeyWDDE's revenue actually contracted by 17% this quarter, falling short of expectations. This suggests that maybe Crocs overestimated HeyWDDE's brand equity or underestimated the competition in that market segment.
Okay, so a significant miss for HeyWDDE. That explains why investors are hitting the panic button. What's Crocs doing to turn things around?
Well, last year they implemented a strategic shift, prioritizing brand health over rapid growth. This involved closing underperforming accounts, raising average selling prices, or ASPs as they're known in the industry, and repositioning the brand as more premium.
So instead of chasing quick sales, they're trying to build a stronger, more sustainable brand for the long term.
Wow.
But it sounds like this transition is proving to be more difficult than they anticipated.
Exactly. The turnaround is taking longer than expected, and that's what's really spooking investors. Despite their efforts, the financial results aren't really reflecting those improvements just yet.
So what are they doing to try and get HeyWDDE back on track?
Well, they're experimenting with a few different strategies, really focusing on attracting new customer segments, particularly younger women. They've brought on Sydney Sweeney, the popular actress, as a global brand ambassador, and they're seeing some good engagement from that partnership.
Sydney Sweeney's a good get. She's hugely popular with Gen Z and millennials.
Exactly. And they're also leveraging platforms like TikTok Shop, where they've actually been the top performing global brand on some launch days. They're tapping into that immense influence that TikTok has these days, especially among younger demographics.
That makes sense. TikTok is where young people are discovering new brands and products these days. What else is on their agenda? I know they also partnered with Barstool Sports, which seems like a very different audience.
You're right. The Barstool partnership, along with their refreshed Collegiate collection, targets more of a younger male demographic. It's a clear attempt to broaden HeyWDDE's appeal and find those new growth avenues.
So they're casting a wide net, trying to find that right mix of consumer groups to revitalize the HeyWDDE brand. But with all these investments and changes, it must be impacting their financial performance, at least in the short term.
That's a key point. While Crocs remains financially strong overall, thanks to the continued strength of that core Crocs brand, these investments in HeyWDDE's turnaround are definitely putting pressure on profitability. Let's maybe shift our focus to the overall financial health of Crocs, Inc., and we can delve into the specifics of that next.
Yeah, let's do that. Let's Let's examine those numbers. I imagine investors are very eager to see
Yeah.
how the company's navigating these choppy waters.
Yeah. Well, the good news is that Crocs has a very strong liquidity position. They ended the quarter with $186 million in cash, and they have access to a lot of borrowing capacity.
That's definitely reassuring to hear. Having that financial cushion certainly gives them flexibility as they work through these HYDDE challenges.
Absolutely. And they haven't been sitting idle with their cash. Crocs has been actively reducing their debt. They paid down approximately $110 million during the quarter, bringing their total borrowings down to about $1.4 billion. So essentially demonstrating, some financial prudence, which is always a positive signal.
So they're being fiscally responsible, which should please investors. What about shareholder returns? Are they still buying back stock?
Yes, the share buyback program is still in effect. They allocated $151 million to repurchase 1.1 million shares during Q3. This indicates that they believe in the company, and they're using that strong cash flow to reward shareholders.
Okay, so despite the drag from AHYDDE, it appears that their financial foundation is solid. But let's look ahead to the rest of the year and beyond. What does their updated guidance tell us? What should investors be watching for?
Well, they've made a slight downward adjustment to their full-year revenue growth projections. They're now anticipating growth of approximately 3%, down from their previous range of 3 to 5%. So this suggests a slightly more cautious outlook, particularly for the fourth quarter.
Okay, so a bit of a tempered outlook, but still positive growth overall.
Yeah.
What factors are influencing this revision?
Primarily, I think they're concerned about the North American market. They're expecting relatively flat performance there compared to last year. And they attribute this to several factors, including, a more discerning consumer and the macroeconomic headwinds that we've been talking about, and maybe some timing shifts in wholesale shipments.
Yeah, that makes sense. Consumers are definitely tightening their belts,
Yeah,
given the current economic climate, especially with the holidays coming up.
precisely. And remember, they're facing some tough comparisons to last year's very strong fourth quarter performance.
Yeah, that's a high bar to clear.
Yeah.
So a potential slowdown in North America. But what about their international business? That's been a bright spot for them. Are they still optimistic about that growth internationally?
Yes, they remain very bullish on international expansion, particularly in markets like India. They're ramping up local production there to meet that surging demand. They're also seeing good momentum in Europe and Australia.
It seems like their global diversification strategy is paying off.
It is, and this international growth is projected to be a primary driver for Crocs in 2025. While they haven't given any specific guidance yet, they've indicated that international markets will lead the charge, while North America might see more moderate growth.
Interesting. So they're doubling down on their global strategy, which is understandable given the growth potential in those markets.
Right. But they've also emphasized that there will be continued investments in talent, marketing, digital, and retail expansion. These investments, while crucial for their future growth, will likely impact profitability in the near term.
So it's a delicate balance. Investing for the future while managing current profitability. What are some key takeaways for investors to consider as they're processing all this information?
That's an excellent question, and it's something we'll definitely explore further as we wrap up this deep dive. Stay tuned as we analyze what this means for you and highlight those crucial factors to monitor as Crocs navigates this complex landscape.
Okay, so we've covered a lot of ground here. The Crocs brand's, sailing along, but HYDDE is well, it's turning out to be a bigger challenge than initially anticipated. For those of you listening who are investors or potential investors, what does this all mean? What should you be focusing on in the coming quarters?
I think this earnings call definitely painted a more nuanced picture than maybe many analysts were expecting. Crocs, the core brand, that's a powerhouse. It has a lot of global potential. But that HYDDE acquisition, while strategically it made sense, it's proving to be more of a long-term investment than a quick win.
Yeah, the stock took a pretty big hit today. Is this an overreaction, creating a buying opportunity?
Yeah.
Or are there deeper concerns here that would warrant caution?
I think that's the million-dollar question, isn't it? There's definitely a lot of uncertainty surrounding that HYDDE turnaround. And of course, the macroeconomic environment adds, another layer of complexity. But here's what I find interesting. Crocs leadership seems genuinely committed to making HYDDE work. They're investing significant resources. And they're being very transparent about the challenges.
Yeah, you're right. They could have easily downplayed the HYDDE struggles, but they really addressed them head on. They even used the term green shoots to describe some of the positive signs they're seeing. acknowledging that they're still early in this turnaround process.
Exactly. They're not trying to sugarcoat the situation. And to me, that's a sign of, good leadership. It suggests that they're willing to be patient and transparent as they work to unlock HYDD's potential.
So there's potential for high reward if they can pull it off. But it's not without risk. What are some of the key indicators that you'll be watching for in the coming quarters?
Well, first and foremost, I'll be looking for evidence that those new marketing initiatives are working. Are they attracting new customers, particularly with that younger female demographic, the one that they're targeting? Are those green shoots translating into tangible revenue growth? That's really the ultimate measure of success.
Right. Those marketing investments need to deliver results sooner or later.
Yeah.
What else is on your radar?
I'm also, interested in seeing how they manage that balance between driving growth and maintaining profitability. They've indicated that 2025 will likely be another year of investment, which, as we've discussed, could impact margins. It's a tightrope walk. They need to continue to nurture that core Crocs brand, while simultaneously investing in HYDD's turnaround.
It's a complex situation, no doubt. For our listeners who might be considering Crocs as an investment, or those who already hold the stock, what's your final takeaway? What should they be thinking about?
Here's my perspective. Crocs is a company with a proven track record of success. They have a very powerful brand and a very savvy leadership team. They're navigating a challenging period, no question, but they're also pursuing a very bold long-term growth strategy. And the question is, can they replicate that Crocs success story with HYDUDE? Can they transform a struggling brand into a thriving asset? I think that's the big unknown, and it's what makes the story so compelling to follow.
Yeah, it's a gamble.
Yeah.
But one with the potential for a big payoff. If they can execute their strategy effectively, we'll definitely be keeping an eye on this story as it unfolds. Thanks for joining us.
My pleasure. It's always interesting to see how companies handle the integration of a major acquisition like this and how they strive to create those synergistic benefits. This particular case is especially intriguing.
And that wraps up our deep dive into the Crocs Q3 earnings call. We hope you found this analysis informative. As always, we encourage you to do your own research and due diligence before making any investment decisions. Remember, investing involves risk, and past performance is not a guarantee of future results.
But that's also what makes the market so dynamic and captivating.
Indeed. Until next time, stay curious, stay informed, and happy investing.